Good morning. I'm Peter Milios from the Finance News Network. Stocks rose Friday and capped off a winning week fueled by better than expected economic growth and a pop in Tesla shares. Investors have been weighing economic data released on Friday ahead of this week's Federal Reserve policy meeting. To close the day, the Nasdaq Composite jumped 0.95%, while the S&P 500 gained 0.25%. The Dow Jones Industrial Average added 0.08%. All the major averages posted a positive week and are on pace for a month of gains. The tech-heavy index rose 4.32% and closed out its fourth week of gains. The S&P and Dow added 2.5% and 1.8% respectively this week. Earnings seasons is pressed on, with strong guidance boosting American Express shares by 10.5% despite a top and bottom line miss. Some chip stocks rose, even as Intel slumped more than 6% on a dismal earnings report that missed expectations. Tesla rose 11% on Friday and more than 33% for the week after reporting record revenue. It marked the electric vehicle stock's best weekly performance since May of 2013. This coming week brings earnings reports from many of tech's most important players, including Meta Platforms, Apple, Alphabet, and Amazon. The results should shed a new light on the ad market and consumer spending trends, and they will provide fresh insights into the most important trend in enterprise technology, cloud computing. All eyes are awaiting this week's Fed's policy meeting. The Personal Consumption Expenditures Price Index, excluding energy and food, showed prices rose 4.4% from a year ago, the Commerce Department said, and in line with the Dow Jones estimate. The US dollar has wilted against its peers in the opening month of 2023 as the Federal Reserve fades as the key driver in currency markets and investors focus on the policies of other major central banks. The Fed's campaign of big rate rises captivated investors in the first 9 months of 2022, igniting a rush into the dollar. But as the US central bank has slowed its increases in borrowing costs, the currency has slid against its peers. The dollar has fallen 1.5% in January against half a dozen major currencies, leaving it on track to record its fourth straight monthly decline. It is now trading at its levels last seen in May 2022. In sector news, consumer discretionary was the standout, up 2.27%, whilst energy was the worst performer, down almost 2%. To commodity news, industrial metals have riped higher since November on bets that China's reopening will boost demand for raw materials. A group of base metals, led by tin, zinc, and copper, have surged more than 20% in 3 months, further supported by the US Federal Reserve signaling a slowdown in the pace of interest rate rises and a softening in the US dollar. Star performer tin has rocketed almost 80%, the highest level since June, while copper prices have rallied by a tenth this month on brighter prospects for China's economy following the easing of its zero-COVID policies. Gold is starting the new year with gains. Gold purchased by everyone from central banks to institutions and ordinary investors have lifted the precious metal in 12 of the past 17 sessions, according to the Dow Jones market data. The advance comes after signs of cooling price increases and weakening growth are lifting investors' hopes of a respite from the Federal Reserve's aggressive rate rises. And China is considering a ban on export of solar wafer technology. Currently, China accounts for 97% of the global output of wafers. The technologies increase the electricity output, reducing the cost needed to produce each unit of power, and are a key to accelerating transition to the renewable energy movement. The catalyst is clear. Policymakers in the world's second largest economy are pulling out the stops to revive the economy and get its 1.4 billion people spending more, after 3 hard years of stringent COVID restrictions and harsh crackdowns on technology and other industries. Beijing has completely reversed its zero-COVID policy and has begun loosening regulations on business. The SPI futures are pointing to a 0.2% gain. Thank you for listening.